stocks closed lower Wednesday after the Federal Reserve, as expected, said it is ending its stock-friendly program. The Dow Jones Industrial Average fell 31.44 points, or 0.2%, to 16,974.31, and the Standard & Poor's 500 index dipped 2.75 points, or 0.2%, to 1,982.30. The Nasdaq composite index dropped 15.07 points, or 0.3%, to 4,549.23. Quantitative easing, the bond-buying experiment the Federal Reserve hatched during the financial crisis, was phased out by the Fed, which concluded a two-day meeting Wednesday. At the same time, the Fed pledged to keep its benchmark short-term interest rate near zero for a considerable time after the bond buying ends. While the Fed statement reiterated that the timing of its first rate hike will depend on how the incoming data on inflation and the labor market come in, it did little to change the view at UBS that the first rate increase won't occur until mid-2015, says Maury Harris, an economist at UBS. It does not suggest changes in Fed thinking, nor does it change our expectations for the first Fed fund rate hike in mid-2015, Harris told clients in a report. The Fed's language, however, did suggest that they were getting more comfortable with the economy's improvement. It cited solid job gains, citing a substantial improvement in the outlook for the labor market, as well as pointing out that underutilization of labor resources is gradually diminishing. The Fed also noted that economic activity is expanding at a moderate pace. That more bullish language was viewed as more hawkish, or a sign that the Fed could move sooner rather than later to hike rates, notes Paul Ashworth, chief U.S. economist at Capital Economics. Ashworth still expects the Fed to start raising rates in March 2015, earlier than most folks on Wall Street are betting on. The Fed's announcement signals the end of its third round of bond buying, QE3 in street lingo. The Fed starting scaling its monthly bond purchases back from $85 billion in December to just $15 billion last month. Started after initial measures by the central bank, pushing the key short-term Fed funds rate to zero, which would let businesses and consumers borrow at cheaper rates, did not do enough to revive the economy. The Fed's last meeting ended on September 17. The following day the S&P closed at its most recent record high, and the Dow followed suit on the 19th. Currently, the S&P and Dow are each less than 2% below their record closes. In U.S. corporate news, Facebook shares fell more than 6% to $75.86 after the social networking giant said that expenses could increase by as much as 75% next year as it ramps up spending on investments. Tuesday's explosion of the unmanned Antares rocket manufactured by Orbital Sciences sent shares of the Dallas, Nevada-based company hurtling downward. Shares of ORB dropped 17% to $25.27. Video game maker Electronic Arts turned in earnings that topped analysts' estimates and raised its profit projections for the year. EA's stock rose 3.8% to $38.91. Overseas, Asian stocks ended higher. Japan's Nikkei 225 rose 1.5%. Hong Kong's Hang Seng Index closed 1.3% higher and the Shanghai Composite was up 1.5%. In Europe, Britain's FTSE rose 0.8% and Germany's DAX nudged up 0.2%. France's CAC 40 ended fractionally negative.